John Ozzie here, Head of Training and Development at AudaCity Capital. This evening, I'm reviewing the account of one of our FTP traders, Vaunne. Vaunne has been trading with us from the 25th of March 2021 up to the present day of the 7th of April 2021. Vaughan has achieved the 10% target just under 4 weeks. His daily rate is 0.60% with a monthly return of 10.10% and a drawdown of just 1.90%, which is within a very good, reasonable level of the allowable drawdown of 10%, which is $1,500, bringing the total balance to 13,500. Looking at the drawdown, Vaughan experienced minus 1.34% on the 26th of March, and he experienced again the 3 days after minus 1.74%. But regardless of the drawdown, Vaughan has managed to keep the account and preserve the balance and hit his target in just under 4 weeks. Congratulations on doing this and achieving your 10%. We're going down to the advanced statistics, and we can see Vaughan has a total of 118 trades. And out of these 118 trades, he has 174 out of 118, which represents a staggering 63%, and lost only 44 out of 118 trades, which represents 37%. So Vaughan is 63% prolific and efficient with his trading strategy, and this is very good. So I'm now going to look at the breakdown of the month and the present month we're in right now. In March, when Vaughan started, he maintained 5.42%, and the other half of his 10% came in April, beginning of April, where he maintained 4.45%, which brings us to a total of 10.10%, just coming or combined total of over the 10% threshold with a little variance of 0.10 just on top. So this is very good. How did Vaughan do this? Let's look at the trades Vaughan took. Vaughan has traded quite a few pairs, but looking at the history of the pairs, Vaughan is much more successful trading the pound yen, where he made a total of 147.6 pips going long, and he made 151 pips going short with a staggering total of 298 pips 0.6 to give us a grand total of 1,293.62. And the rest of the pairs he diversified with them to get his 10%, 1,500. Vaughan did not become successful in all the pairs, but he spread his risk accordingly. And overall, as I always say with trading, you could be right or wrong and still end up with profit. It's down to good money management. I always like to offer tips and suggestions moving forward because this is stage one going on to stage two. There's always a lot of room for improvement. As a trader, you always keep on developing and improving your skill set. So looking at his trades now, I'll recommend Vaughan, you stick to the pairs where you're much more successful trading. Stick to liquid pairs. And I'll highlight the pairs in green here, the Euro Pound, Pound CHF, Pound Yen, and Pound US dollar. I'll say, but the main pairs I'll love you to stick to are the Pound Yen, the Pound Swiss franc, and the Euro Pound, followed by the NZD JPY. Stick to these four pairs, but your main pair is the Pound Yen. This is where you're much more successful. Less is more. Always try and use correct lot sizes. Make sure you're not gambling or you're in the right state of mind. You follow your trading plan down to a T. I'm just going to skim through some of your history of the trades you've taken, and we can see from the trades your lot sizes are consistent. That is good, but I always like to be a critic regardless of how good you're performing or not. It's very wrong to trade the market without a stop loss. It's very dangerous, especially with the pound yen pairs. So I'll recommend moving forward, always have a stop loss, because a stop loss is enforcing discipline. You know your predetermined risk, you know your exit, and you know your entry, which makes up a profound discipline strategy where routine equals results. So bear that in mind. Never expose yourself to the downside. Always have a stop loss in place. It's always recommended, and try to avoid taking trades of like less than 2 minutes. When you're seeing trades of 2 minutes, 30 minutes, and you're looking at the results and you look at the pip sizes, you can see panic, fear, and the emotional state of mind is down to probably greed, fear, FOMO, fear of missing out, revenge trading, trying to make money back real quick, or over trading, or you're being too cautious, or you're probably being overconfident and you're probably being distracted. So combining all these things together that make up the emotional state, I'll recommend you read psychology books by Mark Douglas or go on YouTube and try and build on your psychological mindset because trading is actually 70% psychological and 30% technical. So those are a few recommendations I'll make. But at the same time, I'm not taking nothing away from your success. It's always an achievement when a trader hits 10%. So please take my suggestions on board because these suggestions will only make you a better trader and you've already got confidence by making the first 10%. So now when you watch this video review and you take all my suggestions on board, you're gonna even become a more confident trader and a better trader as well. So less is more. Try and focus on where you made your mistakes. And as we're just browsing through, we can see your lot sizes vary, your pairs vary as well. But the common theme of no stop loss, let's try and work on that. And especially with your take profit as well. The name of the game as well can be summarized as risk management. The traders that can manage money well will get exponential profit. So please take my suggestions on board and a very good effort, Vaunne. And I wish you all the best on the next level. And I look forward to reviewing your account in the future, incorporating a few of these changes and coming one step better. I wish you all the best.